Hey, what's up, guys? You're watching Stacks on the Rise. If you're new, welcome to my channel. If you like videos about silver and gold or finance, please like and subscribe. But don't take financial advice from me. Do your own research and come to your own conclusions. If you've already subscribed, welcome back. So in today's video, I'm going to switch it up a little. This channel is primarily about precious metals, but realistically, you shouldn't be saving or investing if you're in debt, especially if you have high interest loans or interest accruing on a high balance on your credit cards. Besides, no one has ever saved their way to being rich, so today's tip is about a style of banking that I personally use called cash flow or velocity banking. There are plenty of videos on YouTube about velocity banking, so I suggest that you check them out as well. It's kind of hard to get a real grasp on how velocity banking really works, but in essence, it's a style of banking whereby using a simple credit line, you can pay off high interest bank loans or high credit card debts in a minimal amount of time. Like, say, a home mortgage could potentially be paid off in 5 to 7 years. A credit card, even though it may have a higher interest rate, is still simple interest rate compared to what's known as an amortized bank loan. Personal loans, car loans, mortgages, student debt loans are all loan products that are known as amortized bank loans. They use compound interest rates on the initial loan totals, which increase the amount on the back end of the loan, which gives the lender more profit. Using a simple credit line, you can pay off a loan in lump sums installments and pay off the loan in a drastically shorter amount of time. By calculating how much income you receive a month in your expenses, food, rent, electric, and other necessities, you can calculate how much money you could put towards paying down your debts. I use all of my income towards paying down my debt. So I personally get out of the mindset of living off of cash. Now, you're probably wondering, debt to pay debt, why use credit line or a credit card to pay off another credit line or loan instead of just using cash or a debit card from your bank account? The answer to that is very simple. A credit card is the only tool in your banking arsenal that once you use the money from your checking account to pay the balance down to zero or pay the balance, you can still use the card. The money is still technically there. Whereas if you use strictly the money from a debit card or a check from your bank account, once the money is gone, then you can't use it again. The money's gone. If you pay back the credit card with the same money, then the money is still there. It's usable again. In turn, you're accomplishing two feats. One, paying down debts faster while increasing your credit score. If you have high interest debts, then don't worry about saving the cash in your bank account. It's better to use the cash to get yourself out of debt because you'll save more money in the long term by not having to pay back all the interest on top of what the loan was actually for. I personally have been using this particular style of banking for the past 2 years, and it's amazing. I will caution that it is easy to overextend yourself, so be careful. But when used correctly, this particular style of banking works wonders. I've been able to pay off all my debts and save money at the same time with this method. How I do it is every check of mine goes towards paying back the line of credit, which I then use to lump sum pay towards a loan or another line of credit till those accounts reach zero. Now, you're probably wondering how someone who believes so strongly to save in precious metals would even consider playing this game when it comes to credit cards or loans. Well, in my opinion, it's all part of the same conclusion. Debt, yes, it's bad when it comes to our money, but not all debt is bad debt. If you know how to use it to your advantage, then it becomes a tool, like precious metals. Precious metals are a way to avoid the debt system entirely, but it's still a tool or a trick up our sleeves, right? Using this method of banking, keeping all finances rotating, new cash turns to debt that pays off old debt till old debt doesn't exist until the new cash pays off the new debts too. It's simple once you get started, and it makes more sense as you go. Also, if you get cash back on your credit card, it helps pay back everything faster. You live basically off the credit card. All cash goes towards paying off the card, but you essentially never run out of money by keeping it all in full rotation. I've used this method to not only pay off all my debts in the past year, but also substantially increase my holdings in precious metals by turning myself into a bill. They say the rich don't work for money, they work for assets. So it's important to pay yourself every time you get paid. The way I pay myself is through the acquisition of assets. In this case, I pay myself with precious metals, silver and gold. I hope this video has helped in some way, or at least broadened your thoughts enough to potentially look further into velocity banking as a potential tool for your arsenal. It's important to me to spread the word when something has helped me so much, such as saving precious metals has helped me to save money. This particular way of banking has helped me to manage my debts to the point that saving and stacking precious metals is easy. If you like this content, I would like to invite you to please like this video as it helps with YouTube's algorithms, and please comment your thoughts and subscribe if you already haven't done so. Keep stacking, my friends.